Good morning. I am going to show you a quick video about subsidiary ledgers, and then we'll do a few more about special journals a little bit later. I want you to see what's happening. I'm going to walk behind the camera and turn it so you can see what's happening outside today. This is what's happening outside James Brunt Community College as we speak. Okay, with the snow on the ground, we're going to talk about subsidiary ledgers. I want you to think about what happens when we post something to the general ledger. We have an account, a journal entry to record a transaction. Let's see, we buy supplies. We debit supplies for $100. We credit accounts payable the same $100. If that is the only transaction we have in our ledger, I can go to my ledger and look in accounts payable. Another there. I have a $100 credit on, let's say, what's today, the 11th of February, and my balance now is $100. But who do I owe that to? If I get ready to write a check, whose name am I going to put in this line? Pay to the order of accounts payable? I can't do that. So what I have is I have a ledger of accounts payable that includes all the money I owe to several different people. And you can imagine if it's a large company, or even if it's a small company, you can have hundreds of vendors that you owe money to. So here's my accounts payable. We're going to pretend that that's spelled right and written correctly. But my accounts payable account has a balance of, let's say, $4,000. And that's in my ledger. Let's say I've got my ledger drawn up here with all the lines and everything. And this is my ending balance in accounts payable, $4,000. Accounts payable is what's called a control account. My term, control account, the book uses controlling account, but I've been saying it for a lot of years, so I'm going to say control account most of the time. I may remember to say controlling from time to time, but that's a new story. Control account. This is going to show up on the general ledger. It's going to show up on my trial balance. It's going to show up on my balance sheet. To support this, I need more information. I need information about who I owe money to, or to whom I owe money, I guess. And so I'll have subsidiary ledgers. Got the date. I have the description here, which we don't use much. And then I have my two transaction columns, debit, credit. And then I have my balance column, debit, credit. And this subsidiary ledger here might be Joe's car parts. And I may owe him $500. And I have my transactions and stuff out here to support that. I owe James hair products. My first transaction columns here, and my balance column. Maybe I owe her $1,200. I really like getting the right kind of style and gel for my hair. So that's $1,700. Let's see. Maybe I owe Bob's bait and tackle took some customers, some future customers, out on a fishing trip, and owe them $1,000. 1,700. We're at $2,700. I owe Jerry's Mud Wrestling forget all the lines there, but I owe them, we'll say $1,300, and that gets me done. If I add up all the balances in my subsidiary ledger, my subsidiary ledger then supports the number and proves the number in my controlling account. The subsidiary ledger supports the number in the general ledger. This will not show up on the general ledger. It's something I'm going to keep internally. Nobody needs to know all this. Nobody outside the company. The same thing happens with accounts receivable. Accounts receivable has a big number in the general ledger and in the controlling account, and then I have subsidiary ledgers underneath. Each one of these is its own separate account, and you'll find that in your practice set. You'll see that, and each one of these accounts will have its entries recorded from the journal, whether we're buying something or paying a debt that we owe these guys. All those transactions will be in there, and add up all these balances, and it's going to support the controlling account. If I happen to have a debit balance, say I had overpaid Jane's hair care products $100, my balance in there would show a debit balance of $100, meaning she really owes me $100 back. And so that would show up here as a negative number when I start adding these up. Just remember, you're just going to take the debits and the credits and add them all up, and any debits we would take away in accounts payable. And accounts receivable, it would be the same thing. If somebody paid us too much and we owed them money, then they would have a credit balance, and it'd be the same situation. Anyway, that's the way subsidiary ledgers work. The subsidiary ledger keeps up with a lot of information that we need, but that we don't want to clutter up the general ledger with. We do all the little dirty work down here, and the general ledger looks clean and pretty and makes us happy when we see it. So that's a subsidiary ledger.